Next, we'll look at step 4, which is general and administrative costs. And this is looking at the general costs for running the business. And it could be corporate level people like the CEO, CFO, the accounting departments, etc. And we need all expenses necessary to cover their costs, such as compensation, insurance, depreciation, utilities, miscellaneous, rent, of course, would be in there as well. And most of these are fixed because they don't vary with the volume. So we still need one CEO, you still need one controller unless things get really bad and start combining functions, but generally we can't consider them as fixed. So in our example, BC Carts estimated these amounts: $5,000 for salaries, $800 insurance, $1,100 depreciation, $600 utilities, $900 miscellaneous. So let's put these into our Excel form, and we'll move to the section called General Administrative. And this is very simple. We just give them the numbers: 5,000, insurance 800, depreciation 1,100, utilities of 600, miscellaneous of 900. And again, this is non-cash expense. And let's use the same color. And total equals sum, open parens, shade it, close parens. So we have a cost of $8,400 for G&A. Next, we would look at the cash budget. So this is a tricky one because we're going to pull together all the cash receipts, all the cash disbursements, and we're looking at timing because sometimes we sell something to a customer and they don't pay in this month. Or sometimes we buy something from a vendor and we don't pay this month. So we have to take into account the cash flow as opposed to simply the accrual basis revenues and expenses. So we'll do an example here of BC Carts, and they have June sales of $90,000. We established that earlier. That's 9,000 times $10. And 40% of those are estimated to be in cash, so those are cash positive for that month. But the rest of the 60% are split into 30% collected this month and 70% collected in the following month. Also given information is that our cash balance in the beginning was $15,000 and sales in May $86,000. We'll see why we need those in a moment. So let's hop back into Excel and go into cash receipts. All right, so we'll have to do this a little slowly because we hop from month to month. First, we look at sales in May, $86,000. 86. And there's a percentage in cash, and it's 0.4. Credit's 0.6. Of the credit, the paid this month is 30%, and the rest is 0.7. So the cash for May sales, it's the sales times 40%, and credit paid in the month of May are sales times the credit amount times the percent that is paid in that current month. And the month of June are sales times the percent that is credit times the amount that will pay the following month. So it's 36,120. If we add these three together, we'll just do a check here. And that would be plus this, plus that, plus that. So when we add these three numbers, it should equal May sales of 86,000. So this number matches this number. So we're in good shape for May. Okay, so now we do June, which is 90,000, and the same spread of cash versus credit and the payment pattern. Let's start with the cash sales in June, 90 times 40%, 36,000. Next, we take the credit amount, which is 90 times 60% times 30%. And then we'll take the rest, which is 90,000 times 60% times 70%. And that's 37.8. If we do a check, it should be 37 plus 16 plus 36 should equal 90,000. Okay, good. So far we're doing well. These are cash receipts.